Today, a Terra executive avoids jail time, which could be good news for Do Kwon. Visa teams up with crypto exchange FTX for debit cards, and hackers take hundreds of millions of dollars from Binance's blockchain in the latest cross-chain bridge hack. Welcome to CNBC's Crypto World. I'm Jordan Smith. Digital currencies falling right along with stocks to end the week in the red following Friday's important jobs report. New data shows a job market that remains strong, with the unemployment rate falling to 3.5%, and that's a sign that the Fed's intense fight against inflation might not be over just yet. The central bank combats rising prices by hiking interest rates, and those rate hikes have been hurting risk assets like stocks and crypto all year. By noon Eastern, Bitcoin fell below the $20,000 mark, Ether dipped to around $1,300, and Polygon traded flat at around 85 cents. Both Bitcoin and Ether are also down for the past week, falling 1.8% and 2.1% respectively. All right, let's talk about the top stories. First, an executive linked to the collapsed Terraform Labs ecosystem just avoided jail time. Bloomberg reported Friday morning that a court in Seoul allowed the exec to skip a prison sentence, and they reported that there's room for debate over whether the executive violated the nation's capital markets law. Terraform Labs CEO Do Kwon and 4 others tied to the firm face that same charge. Last month, Interpol reportedly issued a red notice for Do Kwon, and South Korean officials claim he's on the run, though he has repeatedly denied that he's in hiding. Officials also pushed exchanges to freeze assets they claimed belonged to Kwon, and reportedly moved to freeze his passport as well. Kwon tweeted earlier this week that he didn't understand the quote falsehood, and that he doesn't know whose funds they've frozen. Next, Visa is teaming up with crypto exchange FTX in a bet that shoppers will still want to spend cryptocurrencies even in a bear market. Crypto World's Kate Rooney explains how the partnership will work.
Visa is betting that crypto investors still want to spend their digital currencies even as prices plummet this year, and this could be especially important for emerging markets. The payments giant is teaming up with global crypto exchange FTX to offer debit cards in about 40 countries with a focus on Latin America, Asia, and Europe. The cards, which are already available in the US, will link directly to a user's FTX cryptocurrency investing account, and the move allows customers to spend those digital currencies without moving them off of an exchange like you would with any bank account. That's according to Visa CFO Vasant Prabhu. Visa and FTX handle the conversion on the back end. Prabhu told me in a phone conversation that even though prices have come down, there's still what he called steady interest in spending crypto. He and Sam Bankman-Fried, the CEO of FTX, say the biggest opportunity is in emerging markets, where currency volatility and inflation make access to digital assets a lot more attractive than they might look in the U.S. I also spoke to Bankman-Fried. He called out Turkey and Argentina as big examples where inflation has topped 83% and 78% respectively. Visa's Prabhu also told me he's seen demand for stablecoins, and it's Visa's latest move in the space. It adds to more than 70 existing crypto partnerships. The San Francisco-based company has already joined forces with some of FTX's competitors, Coinbase and Binance, and rival MasterCard has been on a similar crypto deal spree.
Last, the biggest crypto exchanges are reportedly cutting fees to drum up more business. Binance, the world's largest exchange by trading volume, got rid of fees for spot Bitcoin trading this summer. And according to the Wall Street Journal, these fee cuts put pressure on other exchanges to follow their lead. Coinbase recently changed its structure to bring down prices for its biggest investors, those with more than $250 million in monthly trading volume. However, the move could potentially lead to higher fees for users with $15 million to $250 million of monthly trading volume. The Wall Street Journal also reported that crypto exchanges have explored other revenue streams by launching subscription models and marketplaces for NFTs, to name a few. All right, on to our main story. A nearly $570 million hack hitting Binance Coin is the latest in a string of security breaches hitting digital assets. Binance said late Thursday that a cross-chain bridge linking its BNB chain was targeted, allowing hackers to move BNB tokens off the network. So-called cross-chain bridges are tools that allow the transfer of tokens from one blockchain to another. The exchange temporarily halted its blockchain network in response to the hack. Binance CEO Changpeng Zhao said the issue has been contained and BNB chain has resumed operations.
What has to be done, I think, the industry, as an industry, we just got to learn how to learn from this kind of mistakes and make our code more secure. But software code is never bug-free. But in the blockchain world, whenever there's a bug, it could result in very large losses. This is one of the cases that happened. But we were able to minimize quite a lot of the damage to less than 100 million now.
I spoke with a security expert from Solidus Labs about how something like this could happen and what it means for the industry. So BNB Chain is just the latest victim in this string of bridge hacks this year. Talk a little bit about how this exploit went down and how the attackers were able to make off with so much money.
before jumping into the granular details, it is important to say that it's another example that bridges specifically that basically connect and enable users to transfer funds between one blockchain to another, prove yet again to be a very sensitive part of the ecosystem. Vitalik Buterin, the founder of Ethereum, said a number of times in the past that he believes it's one of the potentially one of the weak links, and that they're probably not going to be a sustainable solution. We had another very large hack about 8 months ago using the wormhole bridge. And this one happens on Binance, Binance chain, which is of course one of the most important players out there. In summary, what happened is that essentially the hacker was able to convince the smart contracts that are essentially form the bridge. And again, we use this term smart contracts a lot to simplify. It's basically code and sets of code. The hacker was able to convince the smart contracts to mint funds as if they were his, and then ultimately withdraw. At the moment, we know that we were talking about $570 million worth of Binance coin, around 2 million Binance coin. It seems at the moment that he wasn't able to withdraw all of them from the system because there was a relatively quick response for a decentralized operation that basically paused the system for 8 hours. So right now the estimates are that about $147 million was actually withdrew from the system, but also were not converted to cash, but rather put into other areas in the blockchain ecosystem.
So let's talk a little bit about that centralized topic. There are sort of two groups of bridges. There's the trusted, which has that third party to facilitate transactions. And then there's trustless, which is more decentralized. And in this case, the BSC token hub was a trusted bridge. So was Ronin. Which of these is perceived to be safer, actually? Is it trusted or trustless bridges that people should expect to have a little more protection for their assets?
It depends on your opinion. There are a lot of people who would argue that without any centralized entity that can control the blockchain, the operation, the bridge, it's safer. At the same time, you're also seeing that in this case, a quick response, by Binance that was able to orchestrate I believe 26 nodes essentially that operate the blockchain, led to a pause of the system that actually, it seems at the moment still being investigated, saved a lot of money from being withdrawn by the hacker. So, I hope you'll forgive me for not, making a clear statement here, because at the end of the day, it's a matter of opinion. Decentralization is not a binary. It's a spectrum. And essentially, it's expanding the realm of financial services that will be available to all of us. All of us will have to pick, where do we prefer to put our money? Is it in more decentralized places, or, fully centralized places, or somewhere in the middle? And there are a lot of different models that are being developed.
So let's turn to the enforcement and recovery side of things. When these hacks happen, how can these funds be recovered? I mean, we're talking about billions of dollars that has been taken this year in these sort of cross-chain bridge hacks. What does it look like from the law enforcement perspective?
So here again, there are new challenges, but also new opportunities. And I think that's generally the theme for crypto. And that's true from law enforcement's perspective as well. Because first of all, again, important to emphasize that this is quite unprecedented that the entire blockchain, and it's important to say BNB chain is one of the largest blockchains in terms of capacity and volume after Ethereum and Bitcoin. So a very significant part of the ecosystem. In this case, first of all, it's important to point out that it seems at the moment that a large chunk of the funds was secured by pausing the blockchain. About $150 million worth of BNB were transferred to a few layer 2 protocols. That's at least what we understand now. Now, what we know from the past when it comes to law enforcement is that while blockchain usually comes with anonymity, and when a hack like this happens, it's hard to know who did it. Because it's on a blockchain, it's actually easier than if it was just dollars in cash. It's actually easier to know where the money went on the blockchain. And because of that, it's very hard usually for hackers, increasingly hard, as the system, as blockchain and crypto becomes more regulated and improves security and market integrity standards, it becomes very hard to turn that into cash through a regulated entity, because only regulated entities can deal with US dollars. We've seen cases where sometimes 5-6 years after a hack, there was an arrest. And if we think about the Bitfinex hack from 2015, about a year ago, it ended up being the largest recovery of funds in the history of the US Department of Justice. So what I'm trying to say is that on the one hand, there are lots of new challenges to trying to understand who has the money, where it went, and how will it be recovered. But we also know that there's a very high level of traceability here. And law enforcement agencies have been taking advantage of it in order to make sure that at least the money doesn't end up turning into cash and the malicious actors are not able to use it.
So let's end on the regulation and enforcement angle there. I mean, we've seen through data this year that DeFi hacks and other exploits are up, but also at the same time, you have the US stepping up enforcement. The DOJ has enacted new ways of tracking down crypto criminals. You said that it's taken 5 years in some cases to track down these funds and have some sort of law enforcement presence there. Do you expect that timeline to move up for these criminals to be caught faster?
I definitely expect that law enforcement will become increasingly efficient and faster in its ability to respond. And you know, important to say, the hack I mentioned happened in 2015, which is, you know, somewhere in prehistory in crypto, even though it's not that long ago. You know, it took those years to develop the, you know, to develop the capabilities and for law enforcement agencies and regulators to adopt them. But you know, we're in a different place today. Again, the money was traced from the get-go, and you know, it was traced for a while. What took a little bit longer is to understand who has it, connect it to a real-world person. There are various ways to do it. But you know, I anticipate that in this case and in the future, it's going to happen a bit faster. It is important to say, though, that there is no guarantee. You know, law enforcement will work very hard on this, but in a less regulated space with new technology and with there's so much buzz and FOMO, it's very challenging to know for sure whether it will be recovered.
All right, that's all for Crypto World this week, but we'll be back again on Monday, and we'll see you then.